The following program contains views that are not those of WVTC, iNetworks Communications, their subsidiaries, affiliates, or financial supporters.
You just gonna cut the song? I was just the jam to that. All right, how y'all doing? I'm the only water. Did she not get water? No, I was going. That's an inside joke. Yeah. Hey guys, it's Brian Sewell, the mortgage doctor. Glad to be here every Thursday from 4 to 5 on WVCC Radio. Look, I got two special guests in. A longtime friend of mine, Jim Drowski at Illinois Credit, and Dave Weiner.
Yeah,
look at that. Of Century 21. So look, guys, the whole purpose of this show is to help everyone accomplish the American dream of home ownership. So, you know, whether you're talking about rates being higher or your credit being one of the main reasons why people get nervous about buying a home or not having enough funds, we're always talking about building wealth. We're always talking about how there's creative way to get your rate down. But I'm going to deal with the big elephant in the room is credit. And who better to bring in but my brother from another mother, Jim Drowski at Illinois Credit. How you feel today, boss?
I'm good, Brian. Thanks for having me on.
Good. Jim, I know you for a long time. We were at a point where we couldn't do certain things together, and now we can.
Yeah.
Just different rules and stuff like that. But That being said, you're one of the few people I know in this industry that actually does it the right way, and actually there's no gimmicks.
Right.
Well, so
you know. So that's the whole thing about it is there's rules that you have to follow. There's right ways to go about it, and there's not a lot of there's very little education about credit for consumers in general, right? They don't teach this in schools. They don't it doesn't matter where you grow up, what zip code, where you went to school, none of they just don't teach it anywhere. And then
certainly nobody of home buying age right now.
No.
Right?
Sure.
Like my kid just graduated and they taught him in his senior year.
Yeah.
But I mean, I know people graduated a couple years before him and they didn't.
Right.
So
right.
I mean, so definitely anyone who's again of home buying age in their 20s or anything, they never got it. We never got it. It's horrible.
And they run your credit for everything.
They taught you how to write a check, though.
Yeah, which nobody writes.
No one writes a check anymore, right?
Exactly.
You know how to mail an envelope.
Exactly.
Yeah, it's very rare. I was trying to think last time I wrote a check. I think the cleaning lady actually likes checks that she's coming by. The other night we started selling her. So other than that, but no, I mean there's so many different things you hear about credit. You know, I know a little bit. You know, I've been doing this long enough, but I feel like that you're going to come from it with a different perspective. And also, this is something you do every day. You look at credit. And, we hear about all these different credit modules, credit scores. People say, I go to Credit Karma and, my score's off. Something I'm throwing. This is non-planned, guys. Jim, when I do it, I just put you on the spot. So,
I totally got that.
Just take us through that. Take us through, like, how the whole credit system works.
Wow,
that's a lot.
How much time do we have?
Well, an hour. We're trying to squeeze it in.
Yeah, try to squeeze it. Just give a little bit, and I know there's going to be a lot of points you want to hit on.
So, right. So
we'll start with the basics so people understand what they need to do.
Sure. So the first thing that I always the light bulb moment that I try to create for people is understanding what a credit score actually means, right? Because we know we have a credit report, then we have credit scores that are on those credit reports. And what most people tend to think is that it's a grade of your past performance. Whatever you did in the past, here's your grade. It's like a report card. That is not how credit scores work.
And that's past don't matter.
It does.
It's one aspect, right? There's a lot of different things that go with it.
Yes. Right. So what it is, what a credit score is, it's not a grade of past performance. It's a prediction of future delinquency. Because that's what lenders want to know. When lenders lend money, when you're lending money, you care about one thing. If I lend you money, you're going to pay me back, right? So the scoring models were designed to predict what someone's going to do in the future. And when consumers hear that for the first time, I mean, that's not a complicated concept, but if people aren't explained it, you got to be told that. You have to be explained it. So
Right.
when people start understanding it, then it starts making sense when you talk about the types of credit you have, your activities, the collections, or what balances you should carry on your credit cards. All these little things start to make more sense when you put it in the perspective of what the purpose of the scores are and why there's all these. We'll talk about different scoring models and things too. So
Yeah, so it's basically there's a percentage, but your past is one thing, but your past helps predict what you can do in the future.
Yes.
Right. So I mean, like if it's like a one-time, you think about kind of similar to what happened in '08. We have some similar situations now with Americans and stuff like that. Yeah, credit card debt is all-time high. So people losing jobs, things of that nature. So you might see a little bit of similarity, but that might be a one-time thing compared to somebody that habitually pays everything late.
Yes. Oh, yes, definitely.
Okay.
Definitely.
So it does. It's a sign of, I'm not gonna say their character, but to some extent.
To some extent,
Yeah.
sure. I mean, they don't know anything about you, right? And they're
Yeah.
trying to figure you out, and all they know is what's on that credit report. So,
Right.
Right. And so from my standpoint as a realtor, this is when I kind of explain to people who get, sometimes justifiably, sometimes just ignorantly very upset about what their credit score is or why are they using that. I'm like, well, there's a bad history of not using this as a parameter, right? Of people just looking at all the things that are now protected classes.
Right.
And so this is a much more fair system than what we used to go by in this country. Even the government, like the original FHA guidelines were, discriminatory in multiple ways, right? So this is not the perfectest system we could ever design, but by comparison to what we're using before, it's at least a neutral design. What goes into it is what will come out of it, right? Like, so I guess my question for that would be, obviously history is one component, but what are the components that go into, or maybe start with that. What's the formula?
So we have to talk in general when we're talking about this, because there's a lot of different scoring models out there. There's
sure, but the typical FICO, most people are thinking
correct.
of.
Yes. So your payment
Which is
history,
fair, Isaac, right? We should tell when we say FICO, because we're going to use that term.
Yeah,
probably.
FICO, by the way, has nothing to do with the credit bureaus. It is a scoring model.
It's a scoring model.
It is a. It's
some use it, some don't.
It's a statistics company. It was invented by a mathematician and an engineer to create scoring models. The bureaus gather the information. The scoring models grade it. So the typical FICO score is has 5 basic components to it, right? The past history, that's the biggest component, but it's surprisingly only 35% of your score.
Right, it's the biggest, but it's not.
It's not
It's
as
a
big.
plurality. It's not a majority.
So I want you to hold that thought. I want to answer a couple questions. So we got what are the requirements in order to ask for a loan? It just depends. We can hit on that, and then also, is it bad to ask for one or take one out? Bad to take one loan out? Are you talking about as far as the credit's concerned? I'm trying to see where he's going with that. Like, what do you mean by that?
Well, why don't we have him answer? Let him answer, and then we'll come back to those questions.
Let me go over the components.
Right.
Come back.
Yep.
So the second biggest component is 30% of your score. That's what they call debt utilization.
Okay.
That is
35 is history.
Yeah, 35 is history. 30% is debt utilization. There's a lot of different terminologies for it. It basically comes down to how much you're using of your credit card credit limits. Basically, that's
right. How much of your percentage?
Right, and that's a good segue into the biggest component. It's not the dollar amount that you're using. It's the percentage that you're using,
right?
Which is very confusing to people, because where people are starting to build credit and they get these $300 credit limit cards, very common. That can be very problematic, because if they, charge a couple tanks of gas, groceries, go to lunch a couple times, they're at $250, $275, which isn't a lot of money, but it's also 85% of your credit limit. That mathematically is no different on a credit score as owing $88,500 if your credit limit is $10,000.
Right.
So
that's how I explain it from my standpoint, right?
Mm-hmm.
Like how that functions to me is when I tell clients about this, because I don't know what, spit in the ocean compared to what you do, but I same with Brian, you've got to go through it sometimes with your clients. And so how I explain it is like, look, if Brian's got 100,000 in credit limit and I've got 50,000, Brian's got a better limit, obviously. But if Brian spent 90,000 of his and I spent 5,000 of mine, I look like a much better credit.
You are a much better credit,
right? Because I might have, he might have better income. Obviously, it's probably how he got to have the 100,000 versus my 50,000. But on paper, it looks like, well, Dave is going to be a better risk. He knows what he's doing with his money. Brian, we're not sure what's going on with that guy, right?
Right.
And it's not like they make phone calls and start asking you, hey, did
No.
you have a rough month? They just look at your score on paper and go,
And
You spend a
they
lot
don't
on it.
know, the scoring models don't know your income. Credit reports don't know income.
right.
They
That's
don't,
what
they
I'm
don't
saying.
even know if
They're
you're
not going to
working
find
or
that
not.
out. Right. They're not going to find that out.
Whether you're working or not in your income, that's a function of the application. Like
Right.
when you take a loan
Right. That gets
application.
the hit. Right.
So all they do, they don't know who's making $1 million or $10,000 a year. They don't know
Not
that.
the score, right? The score doesn't
The
know
score
at all.
doesn't know. The
Right.
bureaus don't know that
Right.
either. So it's only a function of the performance and the habits as they're presented to you on your opportunities to pay, charge, how much you're using of your credit, all those kind of things. That's why having the highest credit limits is a good thing. If people
Right.
can get, I mean,
I always tell them if you can bump it
Absolutely.
up, always take your free
So-
free increase.
Oh,
So
You
I'm
don't
a-
have to use it. Take it. If they offer it, always take it.
You're an expert, so I'll agree 100% with you. But I've been like coached and taught a couple of different things. Obviously, Dave Ramsey, they say has no debt, right? Pay everything off, right? Which because he's got millions and millions of dollars sitting around.
Right. It's easy for him to
it's,
say.
it's hard for somebody to give life financial lessons when they're making millions of dollars a year when everybody else
Their life is
in-
not
in-
applicable at all to
Right.
anyone else's.
The rules don't apply.
They couldn't tell you what a gallon of milk or a
Then I've
gallon of
heard
gas
people
costs.
say like, so I have a business and I have a personal side too. So I put a limit on my business. So
Mhm.
and I'm living on my personal. But they say like I was taught that you keep a limit so you don't get yourself in trouble. Not that I'm gonna go out.
Well,
Like for example, somebody that might be a shopaholic, you put them at a 5,000, budget,
oh
so
yeah,
they're good.
no,
But
you're
there's
totally
one that
right.
say, I'll give you a $50,000 limit. Like, no, I don't want that card.
There's two reasons generally that people don't want a higher credit limit. Number one, they
Don't trust
don't
themselves.
have well, that's the second bigger one. But the first one usually is that they get concerned about fraud. Somebody steals
That's
their
the
card. You
point,
got a
yeah.
20 grand credit card. Somebody steals the card. They
Right.
charge it up. And if you don't have LifeLock or not picking on them, but any other type of insurance,
Security
you don't
insurance.
need that. You don't
Right.
need that because the Fair Credit Billing Act protects all consumers against credit card fraud to a maximum
They
of
do.
$50.
I was going to
period.
ask you that later. Let's come back to
$50?
So how much?
The maximum exposure to a consumer if you report the fraud. If
Right. You
don't
got to report it.
there's
Right.
a-
That's not you.
So
Right.
these
$50
companies that say pay us $100 a month for like the credit, what is it called?
Monitoring.
Credit lock.
It's credit
like
monitoring
LifeLock
and
things
stuff.
LifeLock. Yeah.
You know what it is? It's an insurance policy.
It's
Right.
an extra insurance policy beyond what you're saying.
Yeah,
So
So
kind of
right,
like
yeah.
prepaid legal was.
Sort of.
Yeah,
I mean, there's
but it's
different angles to it.
right.
Yeah, right.
Same module.
You don't necessarily need that to be protected from fraud because
Okay.
the law protects us from fraud.
Right. The law is really.
And the
insurance
other
policy.
thing is what both of you have hit on: people can't trust themselves.
Right.
And just think about
That's
that.
probably the bigger one, though, right? I mean,
Well, if you can't trust yourself, why would they trust you?
That's a good point.
And so if you can't trust yourself, it's like walking.
Just
It's
say
like
no.
putting a pile of money on the table and walking out of the room. If it's not all back here, when I get back in the room,
I know
you
whoever's
what
in that room, I can't trust.
You know what I mean? I mean that's
Hey,
kind of how
I feel a little lighter. Did you take the $10 out of my wallet?
Yes.
I mean that's kind of how credit scores work. They're
Right.
trying to figure out habits and what your responsibilities are with that. And again, and you touched on this a little earlier. The problem is that you can't play this game if you don't know the rules to the game.
Okay.
And it is a much more fair system than it used to be. But there's two things: the reports must be accurate, and
That's where you come in.
well, yes. And when people think of accuracy, they tend to think on the big picture of it. Yes, that was my Visa card. Yes, I went to the medical doctor. But the reality is this is a report. Here, I've never met anybody that has had a medical procedure done at a collection agency's office. Have you?
I wouldn't want them.
Well, I
other
mean-
thing bad enough, trust your doctor.
Well, my point is
Right,
that
yeah.
doctors don't work at a debt collection agency. So what gave the debt collector the right to report something on the credit bureau? You have a right to ask questions about those things.
Definitely, yeah.
You don't have to just assume that what is reported is accurate because it's reported by a third party. It's not reported by necessarily the creditor always or by the consumer. So accuracy is important. And then understanding how your actions, the types of credit you should have. And here, like we were talking about debt utilization.
That was the second one, right? Yeah.
That's
You
number
probably have all
30%.
heard, and this is a very, very common misnomer about what percentage you should have your credit cards at, right? And everybody,
30%, 50%.
30% is very common. It's
Right.
and I hear
Like
bankers
as far as
say,
keeping a revolving balance.
what
on it.
your balance is to
Right.
keep your scores healthy, keep it at 30%
Right.
or less, something like that. That is not the right answer.
What's the right answer?
Well, here I'll tell you, 30% is a better answer than 50%.
Right.
But 50 is better than 75. 75 is better than
You could
100.
be at 0. As long
Yeah.
as
So
you
what
pay
about
bills,
you could
right?
be.
pay it off each month just to get the points?
You can.
Right.
Yeah, you absolutely
The trick
can.
is to use it.
So right, that's exactly right. So here's the best answer. It's an algorithm, right? It's a computer. They're trying to see how you're managing your credit. The best percentage is actually 1 to 3%.
Oh, so we should only have 1 to 3%.
Now, that's a little bit of overkill. What we tell our clients at
Right. It
Illinois
might not
Credit
be realistic,
Services,
but it's
well, it can be, but we tell people 5 to 10%. It's just nice and easy to remember. And
Right.
because if you're at 30%, and we hear it all the time,
and you know.
you get it at 30%, you could see more score improvement by bringing your credit card balances down below 30% down to around 10% or 5%, somewhere in that area.
That's your optimal, like,
Yeah.
because it's bracketed
Yeah,
basically. Is that
optimal
what it is?
perfect world is 1 to 3% if you want
Right.
to maximize your scores.
So that's
but
how
it's
you get
overkill.
that.
You
That's
don't
how you
really-
get in that 800 range. You just.
Yeah.
But it goes in brackets though, basically, right? You get to this percent, you'll
Yeah.
get this kind of reward. Basically.
Like when I've had 850 credit scores, which is a perfect score.
right.
You will never have a perfect score having a 10% balance, 5% balance. You need to be at 1 to 3%. But again, that's overkill a little bit. What people need to understand.
It's not realistic.
They don't
for most
need-
people.
They don't need to be experts in this. They need to know the general rules, and the general rules
Right.
5 to 10% of their credit limits. That's all they need to
I
know.
would say
Okay,
most
let-
people 10% is better than probably.
Look, guys, so
most
we've
of the
got Jim
Oh.
Drowski from Illinois Credit. He's just diving into credit. We're just getting it. So please share the show. Share. If you ever want to buy a home or understand your credit, we're going through that stuff, Jim. Just really quick, you made an interesting point because I've heard, going back to there and just pay it all off each month. When you have, let's talk to some of our customers. Let's say somebody had a setback, they had a bankruptcy, and they're trying to reestablish credit. Is it impossible for that person to have good credit one day? I mean,
Sure.
It is impossible.
Bad credit's
No,
not a
it's-
life
it's-
sentence. It's possible to have.
It
good
takes the
credit.
work, right?
Right,
I mean, that's
right.
what it
Takes
comes
the
down to.
work
It takes
and
effort and
takes some
patience
time.
and diligence. And
What we try to do when we work with people is to kind of get them on the escalator rather than the stairs, so to speak. I mean, it's not like
but it's not an elevator, right? Like you got to take the ride. But
sometimes it can feel like that. Sometimes things happen quickly. It just depends on what the outcome is. And, what you'd want to do is you want to start doing the right things right away. And it just depends on, sometimes things progress very quickly. Things improve very quickly, but we can't necessarily promise that because we don't know that until it happens.
so that's the third component.
That's the second component. Those are the two biggest. The
Okay.
third component it's kind of a boring component. It's history. It's 15% of your score. It's the length of history how long you've had.
Right.
your
It's not
accounts.
It's not the action within the history. It's the literal how long have you had
Yes,
it.
that's correct.
Right. So
That's
5
correct.
years versus 2 years versus 20
That's right.
years.
So if you have somebody with no history, or so how would you advise it? It's funny. I was talking to my wife about this earlier. I'll talk about my son, and I want to talk about locks too.
Mhm.
But like, if I'll use a real example. So for my son, when I buy him a car, whatever. When I buy him a car, should I put him on that car loan or a small car loan just to establish credit for him? I'm paying a
Yes.
bill. So or should I just because
Well, I'll tell you exactly what I did with my
Yeah,
daughter.
go ahead.
Okay, so I have two daughters. They're a little older, both in their 20s now. But from the time that they were 12 and 16, I put them on 4 of my credit cards.
Okay.
They had really, really good. You can't run their credit until they're 18, though.
right.
But on their 18th birthdays, it's funny. On their 18th birthday, they asked me, "What'd you get me, Dad?" And so I pulled out the computer, and I'm like, I pulled their credit report. I was more excited than they didn't even know. what I
Sure.
was
They don't
doing.
care. Right?
So I pull their credit. I'm like, look at that. All their scores were over 800.
Sweet.
And they're like, what am I going to do with that?
Right,
I'm like,
congratulations,
yeah, you
yeah.
have no idea. So, but that's establishing it by adding people as an authorized user to a credit card, which is a great way to build credit. There must be a relationship. What you have to be very careful about is you don't want to be renting trade lines from some of these companies on the internet that will.
Yeah, I've heard that story too. Yeah, so talk about that a little bit. You go
Yeah.
because you say, "Oh, pay $3,000 and we'll get your credit up in 2 days."
Here's the thing: it works. It's not legal though.
Right.
And here's
so many details.
Well,
Yeah.
here's the reason why, and I get into debates and arguments with these people that sell these things all the time because we all end up at the same conferences.
Sure.
Here's the problem. You're getting at it as an authorized user. When you're an authorized user, the good credit history from that card gets put onto your
Transfers.
credit. which is great because it's usually something healthy, good payment history, good balance, high limits, all those great key components, right? But here's the problem. When you buy that information from somebody, you do not know their name. You have no ability to ever use that card. You will never see the card. You are actually not an authorized user. You're saying you're an authorized user.
Mm-hmm.
Now, technically, they're what they'll argue is, well, the bank added them as an authorized user, so they are. But by definition, if you have no ability to, if you don't even know the name of the person,
How can you use it?
you
Right.
cannot.
Right.
And now my kids, I know them, right? I didn't rent that.
Right.
to them.
Right.
That's the difference between the deception of you're deceiving the
I like the
credit
word
bureaus
deception.
to you're basically just
It's fraud.
It's
basically.
Yeah,
fraud.
it is.
Yes.
And you hit it on the head.
It's fraud.
I remember being at, and there's so much stuff I want to ask you, but I remember being at a seminar years ago. I think I told you about this a while, and it was a credit guy on there that was telling people not to pay your student. Like I went first. It's so weird. We were at a church and they're talking, and hopefully this guy doesn't see me on there. I don't know if he's a friend, but we're at church and I'm telling
We'll
people
find
about
out.
doing things the right way, when no one's looking, right? And then this guy gets up there, for all you guys that have child support or that don't pay them, you don't pay your student loans, I'll get them all deleted off. So, which is just crazy. I said, and I told the realtor, I said, look, if it doesn't sound right, it's not right. Now, luckily, I didn't get a chance to go back up there because I would have said something about it. But there are credit companies or credit repair companies telling these people
Credit repair
not,
companies.
Yeah.
And I'm going on and on. I remember from that same thing, this lady came to me like maybe 4 or 5 months later and said, hey, you were at the blah, blah, blah event. I'm not going to say the church. And I didn't pay my student loans, but we looked up, there was a Cavers lien. Now, that Cavers lien doesn't really exist anymore now because they changed the rules. But back then, if you were late on your student loans, you couldn't buy
they
a house.
know it, right?
Right. So, what do you address that?
I mean, it still hits you though. I mean, even
It's
99, you still have to
but
pay
it
your
doesn't-
student loans. It hits you hard.
do, but you can call them on a payment plan or something like that. Like before, you would have to pay off that Cavers lien in order to get a home. So that's a whole different subject.
Well, here's the biggest problem with that is that it's totally inaccurate to say that if we get it deleted from your credit report, you don't have to pay. It's
Yeah.
a legal debt is a legal debt, whether it's on your credit report or not. They don't have
Amen.
they don't have to ever report your mortgage, your car loan. They don't have to report anything. That's just a credit report. If you sign for something, you owe
Yes.
the money for something.
And that's
you know?
exactly like from my standpoint, when I deal with clients who don't know these things and they start off with, oh, I'm working with, I guess I won't name the names, but I'd love to, of like,
Yeah.
L,
Yeah. Oh, we already know where you're going with
you
that.
know,
Yeah, that is
company
kind of fun.
will do.
Are you talking about the big one?
Yeah.
Probably.
Oh,
yeah.
bring them
Yeah.
up.
Okay.
Yeah, because they filed bankruptcy 3 months ago.
Oh,
They
it's-
did.
It's too bad.
You talking about Lexington?
Oh, I didn't know that. Yeah.
Yeah.
Well,
So-
yeah, Lexington Law and creditrepair.com.
Yeah.
Lexington's the and I'm not afraid to bring up a competitor like that, especially like
Well,
You
feel
what's kind of
free.
cool is that this guy Jim Drosky, he actually goes and they ask him at the courthouse, are you're ready
You're
to
like a
testify?
witness.
Yeah.
I've been an expert
Expert
witness in
witness.
over
Yeah.
a dozen cases where they'll ask me to write reports, review court documents, and testify to explain credit and credit scoring to judges.
So
or
we
juries.
got the official person. So
Right. We got
So,
I
but-
told
and
you,
that's
I
like-
don't, he's the only credit guy I ever let on my show.
and
Period.
I get it. And I think he's going to be coming back right with
Yeah,
whether he knows
whether
it
he
or
likes it or not, he's
Yeah.
coming back.
So, because you're not going to get through all the stuff he needs to talk to today, that's
Yeah.
for sure. But so I get these clients and they're like, oh, they promise they're going to, and so like, well, how did that function? Because I need to know and I always want to learn. And they'll be like, well, they're going to get stuff taken off line. And I get it. Like if you got to have a very specific way of filing these things. And if they misspell your name or they put the wrong code in, technically you can go in and get that wiped off. I'm like, yeah, but did you still owe the thing? And they're like, well, yeah. I'm like, so if I owe you $20, you might not care. But if I owe you $22,000, you probably I can get you booted because you spelled my last name with an H, right, Brian? But
well, maybe yes, and
but
yeah.
it's gonna come back, right?
Yeah.
No matter what. If I owe you $22,000, you're not gonna let that go. You're gonna reapply that, and now you know
Right.
you're gonna apply it right.
It's gonna get
And I'm
sold.
still gonna owe
Right.
$22,000. I'm
Well,
not gonna escape owing.
Yes,
the
and no,
$22,000.
but they don't have to reapply it, like correct it and keep it on the credit report. Even if it's deleted from the credit report, you still owe the money
That's what I'm
regardless.
saying. I
Yeah.
still always owe that money. It
You
didn't
Right.
go away.
You always always.
The place that I owned didn't blow up and all their files went away. I mean, it's probably,
And that's
not giving
true.
anyone
That's
hints,
true.
but-
Even if there's a purging date, if something gets removed for 7 years from a credit report or whatever,
right, like a
it's
bankruptcy or
still
whatever.
your debt never technically ever goes away.
Right.
I don't care if it's after they can't sue you anymore after 10 years or whatever. None of that. It never goes away. It just becomes called what they call zombie debt collecting.
Right, it just
Or the
goes
collection
away.
can sell it to another collection company.
And they can do that at any
If
time.
you
so.
want to legally get rid of a debt, I mean, unfortunately, you have to file bankruptcy, you file bankruptcy. But if you're not filing it, you're going to pay those debts.
That's the only way to
You
get
can't
rid of it,
delete. That's why I say illegally.
Yeah.
Delete. It's just come on.
Well, it has to be either satisfied or discharged. Satisfied means you paid all of it, part of it, or something that was acceptable to the
Some
creditor,
negotiated
or was
terms.
discharged in bankruptcy.
Right.
Those are the only
Those
two
are your options, right.
That's
Right.
it.
And
That's it.
student loan, you can pay it or die. That's it. Right now, the way the rules are, right? There's
Right.
there's no getting away with it. So I mean, because I
Right.
get people like that, like you're saying, oh, you got a payment plan, but I've got people that all the time. Well, I've got X amount I owe. I'm like,
Yeah, we
You're not getting away from
got to
that.
get together, man. There's so much more stuff we can do.
Oh, yeah.
So I'm
all
like,
right,
yeah,
so
we do now.
3 is history.
Yeah. So 3 is
$3,000.
history. The last two,
How much is history?
15%.
15%.
Then the last two are each 10%. Okay. So I'm going to cover one really quickly. It's your mix of credit. They want to see you having certain types of credit. It's a mix of credit cards, a mortgage, and a installment loan. You're never going to have great credit without any of those. But here, for somebody that's building credit, the most important of those 3 categories is your credit card activity.
Which is also, though, coincidentally, probably the easiest one for most people to get. Right?
Oh yeah. Yeah.
So
Yeah.
at least that works out.
Yeah,
right?
in most
Like,
cases. And
because you're trying to build it to get the mortgage, right? A lot of
Yes.
times, or
Sure.
and then it's all it's a car payment or something where not everyone always even needs one. So,
Right.
but a credit card is the easiest probably
Mm-hmm.
to get.
Got a question about credit card. This came up this week, and this is from a guy that used to be in mortgages, but he realtor that I trust, and he said, and I've been doing this for 22 years, and I never knew this. He said that if you're, because I was saying there was a credit report, and there was like the guy was 2 times 30 and 2 times 60 on the credit card. And he said, well, if you're 1 day late on the credit card, they report. I said, no, you're not 30 days late. They're not going to report. If you're 30 days late, they report. What's the rule? He said, you got to pay it on the date that is due so it doesn't show up on the credit. So I'm like, no, I don't know if you're right about that, Lee. Sorry
Okay.
for calling you out.
This is a perfect example of how much nonsense is out there that's
Right.
being talked about. Because if that person tells certain people, I mean, you know enough not to know that that's not
Well,
correct.
yeah,
But
I said it's incorrect, but he was like, no, 100%. He wasn't 30 days late.
he must
one-
have learned that on Google.
Yeah. Okay.
So
Yeah.
here's the answer. You are correct. You are considered on time as far as credit reporting goes until you are 30 days late. In fact, so you are on time, and then as soon as you are 30 days late, you are marked late.
Mhm.
Then you can be 60 days late. You can be 90, 120, and so on.
And so 30 days late is from your due date on the bills. You
The
get
due
the
date.
a good old
Correct.
paper bill and a
So we
signature.
can easily send that to you and get it corrected because this person was just like, hey, I paid this. And then
If you're 1 day late and it gets marked on your credit report, then that should not be
Right, you might
reported
owe
that
a
way.
late fee, but it has
Right.
nothing to do
Yeah,
with the
no, you're late. You're late with the creditor,
Right.
right? You are late. It
Whatever
was,
you
it was due on the
agreed to in those
21st.
terms, you
You
might
paid it
pay it
on the 22nd.
Right.
You are late, and then there's that window, and they could charge you the late fee.
Right.
It just depends
Grace
on your
period or
agreement,
not. Right,
whatever. If it's a
exactly.
mortgage, it's going to happen on the 16th of the month or whatever. But you're tech, and I don't want any of your listeners to take this the wrong way, but you can be late on every one of your bills and have a perfect credit score.
That's not advised.
I'm not trying to confuse anybody, but
Hey, Raynard and Franklin.
And Franklin, yeah.
Yeah, thank you. Appreciate you guys for jumping on. Share the show. We got Jim Drowski of Illinois Credit. Dave
Hi,
Weiner.
Latrice
Yeah.
and
Let's
Erica.
see.
Erica, how you doing?
Hey, how you doing? Okay, good info. I'm trying.
Leslie? They're
Hey,
rolling it
Latrice, how you
now.
doing? Here, go back to Erica. Let's get that. Hey, Leslie, how you doing? Erica, say good info. I'm trying to have a house by the time I'm 40. I'm 36 now. Well, girl,
She's
we
got,
can do that.
She's got time.
Yeah,
She's
listen,
good.
we're gonna get you into that home before then. Just give us a call. If you have credit questions, look, I put him on the spot. He'll answer.
so why don't we cover that last component that we haven't talked about?
You
yet?
talked about history. You did mix.
Right.
And
Yeah,
I got
the
another
mix of
question for
credit.
you.
And while he's doing that, if anyone has specific questions for him,
Yes.
now would be the time to write
Oh
those
yeah,
in.
yeah.
while he's
I love
explaining.
questions. So hit me with any of them, and I'll answer it for sure.
Yep.
So the last category is inquiries. I love this category because this is the one everybody talks about.
You
And-
affect this.
Yes.
So inquiry. Everybody always, they'll go to the biggest one is usually the car dealerships where they, you go to a dealership, they gets to the finance guy, they push one button, it goes to 7 places. It's very common. It's not illegal. They can do it. People get multiple inquiries, and here's the thing: people think that it hurts their credit. It does not hurt their credit at all, because there's a thing called inquiry compression, deduplication logic. Those are fancy industry terms to say that the scoring models know that when you're going to buy a car,
It's going to get run a lot today.
well, you're buying one.
Right. You're not buying 27 cars.
Right.
When you're going to get a house or a mortgage, you're getting one. Consumers have the right to shop for a rate.
Right.
And when there's multiple inquiries by a lender for a car loan or a mortgage, it basically you're shopping for an interest rate. You shouldn't have your scores be punished for that. So in the FICO algorithms, there's a window of time. And when I'm going to give you a general time frame, it's basically used 30 days. But there's some of the models, because there's 40 different FICO models. That could be a whole other segment another time. But
The next time you'll
yeah. So there some of the models are 14 days, some of them are 30, some are 45. Basically what the window means is that if you have a whole bunch of inquiries within a 30-day window, all for a car, you go to a Ford dealership this weekend, a Lexus or whatever it is, and you get all these inquiries. If
go
they're
to
all
Western. Drive down Western.
right, if they're all dated within 30 days of each other, they all count as one inquiry for the scores.
Good.
They look bad, but for scoring purposes, they all, if there's one or there's 200, they count as one.
They
That's
still
it.
only last 120 days. They go off on 120.
They never did. So
There's a myth.
yeah,
There
so
we go.
I get that a lot
Learning
in the
stuff.
mortgage industry. So here's what all inquiries stay on your credit report for 24 months, 2 years, all of them. Whether they're in here, when I say all of them, soft and hard inquiries. Okay, the
Which
difference
you'll be
between
explaining soon too.
yes, let's get that out of the way.
We do soft pulls too. So.
Yes, which
I
is
li-
great.
I
Not
like
every
that.
lender does that. That's
I
great.
love that because
Yeah.
these freaking vultures, like as soon as you pull it off credit, you get 100 people call somebody at once. So we can get into that conversation
Yeah,
later.
that's a big thing.
Maybe we'll do that after he's finishing this because this is a really important
So-
component.
Hard inquiries are basically, remember, they're always trying to figure out, are you going to pay your bills in the future? So if you want to look at your own credit reports every day, when we're done with the show, you want to pull it 10 times and then 10 times tomorrow, you're just looking at your own credit report. That is a soft pull. You can go to Credit Karma, not a big fan of that, or credits. You can go to all these
Because
different
they're kind of
sources.
erratic, right? They're not really accurate.
You like my FICO?
Well, no. It's not that it's not accurate. It's just that it doesn't matter. If you want to look at your own credit report, does that change your ability to pay your bills? You're just looking at your credit. And I do like my FICO for reasons of that's where you're going to get the true FICO scores.
Yeah, I've been paying them a little bit of money. I don't get no endorsement. Can I get a deal with them?
You should. So
This is
there's
sponsorship.
hard, and then hard inquiries are basically anybody that can lend you money. Car dealerships, mortgage companies, credit card companies, anybody that can extend you credit. Those are the ones that count into your scores. Now, all inquiries stay on your credit for 24 months. The only inquiries that actually count into your credit score are the inquiries that are on your credit that are hard inquiries for 12 months. That's it.
Those are the ones that affect your credit score.
Those are
Hard
calculated
stay on
into
for
score.
12 months.
As soon as
Yeah.
a hard inquiry is 366 days old, it's on your credit report, but it's not part of your scores anymore. It doesn't matter. Now, you mentioned 120 days. Here's where most people will get that in the mortgage industry. Because on what's called a mortgage tri-merge, right? It's basically
Yes.
mortgage lenders
I haven't
use.
heard that in a while, but yes.
They use a merged report that takes TransUnion, Experian, and Equifax and merges it into one report. But it's streamlined not for the consumer, but for mortgage underwriting.
Right.
And it says in your inquiry section, it says inquiries in the last 120 days.
Which is where you're getting it from.
The reason why it's that, it doesn't mean that the inquiries aren't on the credit report for longer than that. It means that Freddie and Fannie only care about inquiries within 120 days. So that, and they created this tri-merge for mortgage underwriters only. They don't need to show inquiries that don't matter for the underwriting
Right.
purposes.
It's a functional.
It's a
that's all they
functional,
care
right?
about.
It's an industry specific report designed for mortgage line. That's why they show 120 days.
That's good. Hey, really quick, Leslie's asking, and
Yeah.
Leslie, my sister's from a different mother. Do you do credit help for all states?
It depends on the state, but most
She's
of them,
in
yes.
Texas.
I have to look that up, but I believe so. Here, there's only one state in the country I can give you a flat out answer that the answer is no.
Which one's that?
Georgia.
Why is that?
Well, it's illegal to do credit repair in Georgia, and
Really?
I'm not going to make a correlation, but let's just say that Equifax has been based out of Atlanta, Georgia, since 1899.
So you make your own decision. Maybe there's a reason, maybe not, right?
You can come to your own
Draw your own
assumptions there.
conclusions.
Yeah,
Yeah.
draw your own conclusions.
Yeah.
But it is illegal. That's the one state for sure. And there's other states that have legislation for it that are somewhat restricted.
Yeah, that's funny how they would do that. Let's see. Erica, when you're going to buy a house, we want to hear from you. You're not waiting 4 years. We're going to build wealth. If you're paying rent, that's 4 years of throwing money away. Okay, so I'm
Right,
picking
that's
on you a little bit.
48 months.
Yeah.
You're always
Wasted
paying a
money.
mortgage. It just depends. Are you paying yours
Yours
or
or
someone
someone
else's?
else's.
If you're living with family, that's different. We're going to get you into a home.
Right.
Let's see. Latrice, thank you. Renard, how you
So
doing?
what's the soft pull?
Yeah. Yeah.
Because you explained the hard pull. What's the soft pull?
The soft pull is just any one that isn't pulled by a hard pull lender. Basically, if somebody looks at their own credit reports, and not many lenders, mortgage lenders can pull a soft pull, but Brian can, where it actually doesn't count as a hard inquiry and calculated.
Well, it
into the
saves us
scores.
money too. So, like,
Yeah.
I'll tell you why we do it. So,
Saves you some money.
well, that's one. Two, I don't want the vultures.
Trigger leads.
Yeah. These guys, man, it's like, come on. I mean, you build relationship and help your consumers. So basically, your
Yeah.
information is getting sold. It's
That's
kind of
right.
like similar to. I promise you, I get this freaking call and text 60-70% of the time from our clients close afterwards. Hey, Brian, I got this mail that said it's from you. You're selling me mortgage insurance. Mortgage protection. I'm like, nope, that's not for me. Or it's just oh, you know what I'm talking about.
There's all kinds of ancillary
yeah,
stuff
so
that happens
it's,
after it closes.
it's right. So
Security
I always say,
companies, they're
call
all
me,
hitting you.
call me. So no, but we do. I mean, honestly, it financially saves us a ton of money. A hard pull is like $54 for full fall trail merge, and then a soft pull is like $6.
So what's the difference between the two as far as why doesn't everybody just do a soft pull and save both
So
themselves?
you'll have to have a hard pull
Yeah,
when
you
you're
will
doing
have
a
to have
mortgage
one,
at
yeah.
some point. Yeah.
Sure.
But the scores are exactly the same. It doesn't- they're
So
identical.
then what is the difference then? If the scores are the same, why is there this hard pull that costs apparently a lot more money?
well, it,
like,
don't cost, it doesn't cost consumer. It costs us more.
No,
That's
right.
yeah,
but I'm
yeah.
saying, but
Right.
within the industry, that's a significant difference. It's almost $50 difference. It sounds like.
Right.
Why is it just pure money? Is it just pure
Oh,
profit?
I don't know the back end of that answer specifically, other than
I didn't mean to trip you up. I was just wondering.
no, that's fair. But that may be part of it, that it's money. And they do here legally, they have to have a credit report pulled. It's not technically a usable credit report as a soft pull.
Right.
It's more of a it's a
You can't run DU.
It's-
I mean, with some of it you can. You with for
So is it
FHA,
just
Yeah,
is it just what's missing? I guess between the two, is it just the scores are on a soft pull, but you don't get the whole report?
no,
of
you
like
get the whole
what's-
report, you get
the whole
everything.
report.
So
You get
then-
everything. It's the classification of it.
So it's really just like a status.
I mean, by
difference. we
law-
say it's a hard pull
by-
because we said it's a hard pull.
Yes, basically.
well,
Yes.
well, the system. So not to confuse consumers. DULP, they'll accept now conventionally they'll accept it with a soft pull, but for our purposes, it's not fully approved till we get it through the system.
Right.
So if I got a soft pull from a client's perspective and the credit is not great, then I can say, hey, Jim, help them out. And I don't
Yeah.
have to go any further. It just
Right.
costs me $6, right?
Right.
Whereas if we got a full, if we do a full,
And you're not wasting that client's time.
no, I'm not wasting
Potentially
time,
either.
right? We're going to help you, but we do a full pull, now I'm spending more money, and I got to deal with the vultures out there
Right.
calling them left and right. So that's where I'm going to keep calling them vultures, is what they are.
The information on the reports are the same,
Right.
but it's the function of it. Like
And there's no difference in the hit on the credit score for the consumer either.
Well, the soft
Oh, there is
there's-
no-
there's no
on
That's
the-
what I'm saying.
soft.
So, because I think a lot of people, that's their misinterpretation, right? Like, oh,
Yeah.
it's a soft pull. You know, like I can't tell you how many times I've heard that.
well,
From
there's no
lenders.
hit on the soft pull though, right? Yeah.
Right, but on the hard pull,
Oh, there's a hit.
there is a hit. That's what I'm saying. So
Actually, it's a little more complex than that. Actually, when you run a mortgage inquiry on a hard pull, it doesn't even calculate into your score for the first 30 days anyway.
did you know that?
No, I didn't know
We
that.
just both learned that,
You
right?
all I did
Yeah.
was you dropped my score by pulling your credit. I'm like, no,
No, you didn't.
I didn't. Right. You
No.
did something else that dropped your score.
Right. And that's usually, again, it's for lack of information. People don't know. They only know
What's going
what
in.
they only know what they think they know. And so they assign when they see a score drop or increase, whatever, they assign it to something that they
know that they did.
that they think
Right.
is the reason, when in reality it's
Right.
usually something else.
And I thought that the last part of the last thing with the mix and everything, I think that's a very, I don't know if it's underrated, but lack of understanding with it, right?
Sure.
Like about the
It makes
credit
sense.
card
I mean,
mix and
just to kind of summarize it, and I wrote it down. 35% is history, 30% is debt utilization. Wait a minute. 15% is what?
history. It's the history. Remember, it's the history of how
It's
long. The
30
length of-
Yeah, wait a minute. Did you pull okay? I ain't falling for the banana. in the
I
tail.
think we're at
You got the history
140% right
Yeah,
now.
wait a minute. Wait a minute.
So
You got
there's-
history twice.
No, because history. Yeah, because the first history.
No,
the
no,
bigger
that's-
history.
No, that's
That's
payment
what's-
history.
It's
Payment
payment
history,
Right. So you
okay.
can take detailed notes.
Well, I'm a math guy.
So it's what is the mix of your, like, how are you paying it?
All right,
The
give
history
it
is
to us
how-
again.
the
Give us your
second one
numbers.
is how
Okay,
long-
I want to get to 100, Jim.
Okay, yeah, we're
We did.
at 130 right now, I think. Okay, so 35% is your payment history.
Right.
It's actually the presence of anything derogatory is what it really is defined as.
Okay.
So that includes not just were you late or not. It includes charge-offs, collections, the presence of anything derogatory.
Overdrafts, right?
Nope.
Yeah,
No.
no, that's
No, no, no. Nope.
So the bank doesn't. I would say again. I was told by multiple people that they'll report your overdrafts and it'll hit your.
No.
You know, if you've got $300 limit, and you spend $350. Yes, obviously the credit card will charge you.
Well,
but
are you talking about an overdraft on what, a checking
a
account?
credit card,
You
like
can't-
if you go over the limit.
Oh,
Oh,
you mean
over the
the limit, yeah.
Well,
yeah, that
those
does
are
show
just
up.
fees. I mean, that's
Well, right, for a
that's
credit
not
card.
derogatory though.
But it's not derogatory.
No, not
Okay.
at all. No, they'll just add, like, if you have a $35 over the limit fee,
Right.
that'll get added to your balance and it'll impact the second
Right,
component.
the debt utilization, right.
Debt
because-
utilization,
because-
right.
Yeah.
So it does have it. That's what I'm saying. So
But it's not in
not from
itself
that one,
a
but it's
negative
from
thing.
that one. But
Yeah.
but it turns
But
into
it's
the
hurting
second
the
one.
30%.
Right,
Right,
it's hitting
because
into your-
if you have a $1,000 limit, you're at 1,500. You bad boy. Right?
Oh yeah.
You-
Right, because you're already by
you-
the definition of
you're
that
the
habit, you're
definition
over.
of, what is this?
Right,
80%
so if you're
Americans
over,
live paycheck to paycheck.
You are
Sure.
going to be over
Right.
with the
Yeah.
part two, right?
Right. It's
You-
just not affecting the payment history. It's
Right.
affecting
Right,
the
it's a-
utilization.
Right.
Yeah.
But it's still
Yeah.
overall, for
It's
most
bad.
people, it's still bad within the mix.
It's
right?
Mali.
Yes.
Which part of the mix, again,
Yeah. Right.
I think it's important for people to understand all of them, but I think most people, when they think about it,
Yeah.
did it hurt me or not?
Yeah.
It did hurt you.
Well, right, because a lot of people
The
think
why
that
of how it
if-
hurt you
Why
is
are my
different.
scores dropping? I pay my payments on time. You can
Right.
30% of the scores is the debt utilization. It's maxing out a credit card
Pretty
is
good
almost
chunk.
as bad as going late.
Okay.
Right.
But you can fix the maxing out because you can just pay it down compared to go late.
If you
Just
can,
fix it,
yes.
fix
The
it.
biggest thing to do is not get yourself in trouble with credit cards. I tell people when you get a credit card, especially when they're these low limit ones, don't carry it in your wallet. You don't need it.
Right.
Because Eric, I've done
$200
it. We've
bucks.
all done it. You carry. I have 5 credit cards. 4 of them sit in my safe. I carry 1, and that's
It's
it.
like an emergency kind of thing, right?
I do it because those are the ones with the high limits. I just keep them available, keep them open, keep them active. I don't carry them because I also know when you carry credit cards, you use credit cards.
Yeah,
That's it.
I got the two, my personal and my business, and I don't
Yeah.
play around with
Which goes back to the other point where people don't trust themselves,
Well,
but it's a different way of
Well,
utilizing.
Jim's
Right?
got $1
That's the
million
smarter.
in credit cards sitting in the black vault.
But it's,
You know,
that's the smart way
you
to
got
do
the
it.
black card. so-
It's not to limit
That's
your
the other safe.
overall. That's a much different safe. He doesn't even talk about that.
If you don't see him here,
Right.
he's overseas somewhere.
yeah.
So, but that's the different way. Like if you don't trust yourself, this is the smart way.
right.
So like I don't trust myself. If I don't bring it with, I won't use it.
That's right.
Don't not have that.
That's right.
Keep it available, right? And also never close them if you don't absolutely
No.
need to, right?
And you
Always
need
keep-
to use them periodically. Here's what I do.
How often do you need to use them? Is it
Well,
every month?
what-
Is it every
No, what I do once a year, and I do it around the holidays, around Christmas time, because it's easy to remember.
Sure.
I pull out those cards and I buy lunch with one. Might go to Starbucks for another. Buy
right? Start
Bottle-
spreading them all.
Jim,
out.
Jim, I'm a size 11. Okay.
Right.
42 long, like 43 long. Just, you got to go use them.
Right. If you feel
Yeah, like
obligated,
that.
right?
and I'll buy something cheap, and then I'll pay it off. Put them right back in the safe, and it's done. And that's it. And then they never close them.
close them. Right.
Right. And that's exactly what I taught. Like buy one thing,
Mhm.
right? Go to one dinner, one
Not
one
even.
tank,
20 bucks,
anything, one
whatever it
thing,
is.
right? What's
Doesn't
one thing that when the bill comes,
One
even if you forgot
transaction.
about it,
One transaction.
right? Even if you forgot about it, you'll have the money to pay it off if you want,
Right.
and you don't have to worry about it. Like do one thing with it that's payable. So even if you forget, you pay it off, and you can put it back in the safe if you want, and that's all they need to do. But once a year, you're saying, This
That's all I do.
typically.
Right. They never close it.
Yeah.
And I've confirmed with all the credit card companies that they're okay with it. They're completely okay with it. I've done it for years.
Right, because I know
You
sometimes
get
they will
no
close
points
you.
and stuff too.
Well, I used the one card I do use is the one that has the best points.
What's the best card to get for points?
It depends on what you typically
Which
use.
points you're getting for it.
Yeah, I mean, if it's normal shopping and groceries and stuff like
Right.
that, or you
Miles.
travel a lot,
Right.
things. I don't travel much, so I don't go with the mileage cards. Those used to be real popular, but
Right. But it only
You know,
matters
but
if
now
you're going
every-
somewhere.
you can get 3% just about on a lot of different cards. So you want to kind of match it up with a card that has
Your life.
your life basically.
What are you doing?
Right, that's
Right.
exactly right.
All right, back to this. We get to 100. 35%
Yeah.
payment history, 30% debt
So
utilization.
that's 65.
Okay.
Right.
What's this 15%?
That's the history. That's length of history.
Right.
Length.
Right.
So
How long have you had them? Over?
okay, how long? So if you just
Yeah.
if you're a rookie, you're just like my kid, that's gonna affect them. So does he start off with an 850 score? He start off at 0.
No, it's
So the
so
fives or something, right?
Well, no,
No.
he doesn't have credit. He's a kid, so I'm gonna give him.
so everybody. This is a good question. It doesn't come up much. So the typical FICO range is 350 or 300 to 850.
Right.
Typical.
I've never seen a 300.
Yeah,
The lowest score I've ever seen
you
is like a
you
480.
got to really be trying to get into the 300s.
I've seen a
But-
three.
Or not trying.
No.
So,
So-
you really got to be trying. You got to be actively.
Yeah, it's tough. So, but nobody loses points. That's a big
Misconception.
misconception. Nobody loses points. You earn points. What happens is all these categories, there's point values. Here, take 30%. And so here's a little math. It's 850 to 300. That means the score range has 550 points flexibility, right?
Right.
30% of the score of that 550
Payment history.
is
Utilization.
30% is
That's all
utilization.
utilization.
So 30% of 550 is what? 165.
Yes.
That means
50% is 250. Yeah, you're about 160.
Okay.
Yeah.
so 165 points is in that category.
Hmm.
So
So if he's new, he's screwed.
no, not
No, in
necessarily.
history, 15% in history probably will screw them, but the other ones not necessarily.
It depends on here what you do. You add them to a couple credit cards or one
Right, so
credit
he'll build
card,
his
get
history
it,
before
and
he
then-
started.
Yeah.
Get him one credit card, and then I can put him on as a if I buy his car, I can just put him as a co-signer, even though I'm gonna pay it.
Yeah. Oh, and we started talking about that. Okay. When my daughter was 19, she did the same thing. Cheap car. I'm all about, I know this game, right? Building credit and all that. So I did the same thing. However, I have the stronger credit profile. I went first
Right.
on the loan. She went second because on a credit report, you're both co-buyers.
Right.
There's nothing on a credit report that says you are more important than this person. Everybody gets credit the same exact way. It's just a matter of how they score it when you're buying the car and what kind of interest you're going to get. They're going to base it on you, not necessarily on him. So and plus, here's the other thing. There's so many people that they co-sign on cars and said, well, that was my girlfriend's car or my boy or whoever.
Right.
And then somebody didn't pay, or my cousin, he didn't pay. And,
Right. What's
nobody,
that got to do with
nobody
it?
shows up on Thanksgiving and says, hey, by the way, I'm, 60 days past due on that on that car you co-signed for me.
Right.
Because here's the thing. If you're the co-signer, you don't get the notices
notice.
of
Delinquency.
delinquency until it's a repo, usually. They might call you, but when it starts going 30 days late, your credit's getting trashed and you have no idea about it. So if you are going to co-sign and put your signature and your good credit on the line,
You
first
should
of
be
all,
first.
you should be first so you get the notifications, and you better actually be prepared to pay for it, which a lot of people
In this
aren't.
case, I would be anyway.
Well, right.
Yeah, yeah.
Right.
So that helps. So I got another question, and we got a little time. So I've been wanting to get to this at the end and putting you on the spot. So this is
Okay.
something that I did. So and with all the fraud that's going on now, people are still like credit lock or life lock, right? Is what it's called, something like that.
That's one of the companies here.
Yeah. So I locked my credit. It's easy. Treasury Experience Equifax. I was gonna lock my kids' credit, lock my wife's credit, because you can't pull credit without
Yeah,
Permission.
you're right. You're going down the right path, but I'm going to correct one thing about the verbiage about it, and I'll tell you why in a second. So,
Okay, but so yeah, so it's easy. So like if you go in, I want something, I need see if I get a mattress, whatever. I can go in there and I can hit unlock. Either go online, go to TransUnion, tell them unlock it, give them 24
Yes.
hours, and lock it back up. So, what are your thoughts on that? Just 'cause that
Right. Do you recommend that for everyone, or is there certain
because there's a lot of
that
people
makes
that's
more
staying
sense?
24/7 trying to steal people's stuff, right?
All the time. Yeah. So I've been an advocate of this for years. I've been done several things with CNBC telling people freeze your credit reports. And this is what I'm getting at. There's a thing called a freeze of your credit reports, and there's a thing called a lock of your credit reports.
Mine's a freeze. Sorry.
Okay. That's what. So
And that's why he's correcting the verbiage.
Yeah.
well, here's the reason why I'm correcting the verbiage. And I knew what you meant because I think we've talked about it before.
Yeah.
Freezing your credit reports, as you're saying, it's the equivalent of Fort Knox. Putting your credit in Fort Knox and you have the key. Nobody can run your credit. And people get concerned that, okay, now I can't use my credit cards. Now I'm not going to get points. Everything is business as usual. You use every bit of your credit just as usual. You have your points still.
The freeze only lets nobody run your credit without you.
Third parties cannot run your credit report. Right.
Yep.
So, and that's a freeze. That is mandated under the Fair and Accurate Credit Transactions Act of 2003. It's a law.
Don't you love
Now-
how he just quoting these laws, like that? This is
Yeah.
that's why they put
He
him on
knows his
trial.
stuff,
Yeah,
man.
you're a witness,
So
Your Honor. According to 2002. Oh.
yeah, well, that's the attorneys.
Good.
But it must be free. It's by law, right? But the credit bureaus are all about making money, right? I mean, I can't
Right.
fault them. It's a business, right? But I remember when Equifax lost half the country's personal information, they call them the crown jewels, basically. Date of birth, social security number, and your name. Because nobody changes that. You can change your address. Nobody changes those other items. So they stick with you forever.
Especially with Social Security, that's never going anywhere.
So when you lose that information, it could be in the hands of bad people for
Right.
your life, right?
Right.
So when Equifax was drilled on Capitol Hill, I was just waiting for him to come out and tell everybody freeze your credit reports. But here's the problem. When you freeze a credit report, nobody can run your credit, right? It can really tighten the reins on the financial world of their ability to lend money, right? So what's not
So they're
free-
not going to advocate that.
well, they're under no obligation to promote it,
Right.
So, but what they do promote is a lock,
Right.
and that's why. And I knew what you meant, but the lock they are allowed to legally charge for.
And what's the functional difference?
They created an app for the lock. There's no app for on a freeze. You can only access it online. Now you can access it through your phone online, but you're going
Online.
through the web,
Right.
and you freeze your credit reports. It's the same function. You log in, you unfreeze it. I mean, I've unfroze my credit like here. If you freeze your credit, you know when you're going to apply for something.
That's the whole thing, right?
Well, they do mine every year because when we renew our license, they pull our credit to make sure.
Yeah,
we're
there you
doing
go.
something.
It's
So-
easy to do. But if you do a lock, now they have the ability to charge a small amount for that
Of
lock.
course they do.
But
That's the
here,
whole-
multiply, and I'm just not quoting their pricing. Multiply $5 times 12 months times millions.
Right. So you're at
60
$60
bucks
times $1 million. $1 million bucks.
That's-
That's
Let's
We're
round it up to
$100
100 for jump
Right,
fees, so
right.
12 million bucks.
So it's a business, and it makes sense. So they make it a little more convenient. But or whether you're going to lock and pay a little something for it, or you're going to freeze your credit reports, as you were pointing out, in today's day and age of fraud, and you want to sleep good at night, freeze your credit, lock your credit. I just freezing your credit's the better way to go. My credit's been frozen for years.
And it's free.
Yeah, and it's
Totally
easy. It
free.
takes a couple of minutes.
Yeah, in fact, I can email the links to anybody that wants them, if they want. But
Jim,
they're
by the
pretty
way,
easy.
so look, for people that want to, take us through the process, and you got to come back on the show.
Yeah. Maybe
This
twice.
is going by too fast. I'm gonna make you come on once a month. Can you do
This
that for me?
was.
Sure.
Like I said, put them on the spot. See, they
Yeah.
can't, they can't
Right.
tell
What's
me
he gonna
no
say? No.
on my show.
Right.
So look, so take us through a couple of minutes of the process of what your team do. You got to do a fantastic job on how they help. So and then you can give your information on how you get in contact with us.
Yeah. So the first thing that we do is explain the process. That's the most important thing, because there's a lot of credit companies that just make promises to people, and the world, there's no crystal balls in this industry. So I have a 15-minute video on at IllinoisCreditServices.com. It's on the front page. You just watch it. It
Can we
actually,
put that in there? IllinoisCreditServices.com in the comments.
and that just explains the whole process. But basically, once people enroll, there's no upfront fees, and then we'll help them obtain their credit reports. We basically do an analysis of all three credit bureaus to figure out what's derogatory, what's not, what's needed, and then we get permission from the consumer on what they're asking for us to dispute on their behalf. We write all the letters. We actually do something different than what any other company that I know of. When we write dispute letters, we send every dispute letter to every consumer.
So we, the consumer, would know what you sent out,
Yes,
basically.
absolutely.
That's good.
There's nobody does that because they don't. I get into these debates with these other companies. They're like, why are you telling everybody the secrets? I'm like, they're not secrets, they're strategies, right? And
Where you're educating people.
And you're supposed to be helping these people.
you're supposed to be helping them, right?
How can you help them if they don't even know what they're doing wrong?
Well, right. And I don't think any letter should be written to $1 billion corporation on your behalf without you knowing what's on that letter. So,
Yeah.
so we send out the letters. But there's also that strategy of working to lessen or eliminate as much of the unverifiable bad credit that's on there by asking questions, playing that chess game of you're writing letters, but also working on the right good things with people too. Trying to help them build and establish the right.
You're giving
good
them a
things.
whole cohesive strategy.
Oh yeah, absolutely.
That's
Because you just can't work on one side of it. You got to work on both sides at the same time. So there's things that they need to be doing, and so we work together with them. You know, and a little education goes a long way too. So they become, after somebody's done working with us, they're better consumers of credit as well because they understand the process.
Sorry.
seriously.
That's my pump, guys. Sorry.
Someone needs a cookie.
No, I need to lower my sugar. I'm 200. But go ahead.
Less
Apologize.
cookies.
That's okay.
So, yeah, before I while messing y'all up.
No, he's telling them how he's going to give the whole plan to whoever contacts them. And how long does that typically take, like from start to finish?
Well,
for them?
there's a lot of answers to that. The 2-word answer is what that applies to most things in the world of credit is it depends.
Sure.
But
I mean, that's solving their whole problem, right? Because that can vary wildly
so
from person to
there's
person. But like the setup, the
yeah.
first part, like
well,
giving you the information, you giving them like
yeah.
the
So
path.
we'll when they enroll, we don't bill them for 14 days. We do all their first letters in the first 14 days, and we get started right away. But in the world of credit repair, by law, you can't bill until work is done. So we define our work as doing all of our first letters, and then so we do that, and then we bill for the first work, and then we bill month to month, and people stop whenever they want. And then it becomes, when do they what are their goals? Are they trying to get to 580? Are they trying to get to 700? Are they trying to get a jumbo, or some people aren't even trying to buy a house? They're trying to get a car or credit card or
just
whatever,
established credit in general,
or
right?
whatever it may be, right? And so
Those will all be things that we're going to get to talk about next time you're out,
Yeah,
I'm sure.
yeah, of
Because
course.
that's going to come in for Brian.
Yeah, and at the end of the day, it's people's personal choice on how long they want to work with us. I mean, people buy their houses and they don't necessarily want to slide in at the minimum, so they keep working with us to get the best credit they can
Sure.
because
Well, you get better
Better
deals,
rates.
better rates.
Oh,
You higher your score,
right.
the
your
better.
insurance, we could talk about that one day too.
That's another-
insurance
definitely.
rates are
People do not understand that, like, whether it should be or not, at least right now, until because some states it's not, but in Illinois it definitely is.
oh yeah, definitely.
It's a
it is.
component of your rate that
Yes.
might not be
A big
again,
component.
fair at all, but it's completely a component of
Right.
what
And
you
people
get
have no
charged.
idea about it.
people
either.
have no clue.
No.
I talk to people all the time about it. They're like, wait, what? I'm like,
Yeah, credit plays a factor in everything you do. Man, this is good. You haven't even hit on all the stuff yet.
We're just getting
Okay,
started.
yeah, look, guys, we're gonna have Jim come on. I'm gonna try to get a schedule for him to come on at least once a month if he's up to it.
Sure.
Because I think when you think about seriously, like the things that stop people from buying, and we're all about building wealth and educating, right? The three threes: educate, encourage, empowerment. So this
is the first stop.
Yeah, it's credit, and then it's usually like cash, right? So if you get the credit together, you're more likely to we'll lend you more cash. That's really what it comes down to, right? So we haven't even come.
If you don't have credit, they won't lend you anything.
No,
Right.
no,
And that's-
yeah. We sometimes we do alternative credit, but that's
Right.
I mean,
that's
so in
our-
our business, some of the people that have the worst scores make the most money.
Oh yeah.
You see that? It's
We
kind of
we
weird.
probably all
That's a
seen that.
whole
It's a
nother
weird
show.
inverse thing, right? That's another whole show.
Yeah, I mean, it's kind of weird. I was thinking about that. I had a surgeon that made like 700 something thousand a year. His credit was like 560, 570. It's been a while, but I'm like,
Because a lot of times it's just overlooked because they pay everything in cash
no,
up
my
front. They don't
wife's
even
supposed
pay
to
the
pay the
the
bills.
Right. And
That's what he told me.
they think sometimes, nothing against them, but they think that their assets and their income
qualify.
overshadow that. But
Right.
you have to remember, a credit report is a report. They only know
They don't know how much money they make.
It's a computer.
Doesn't care how pretty you are,
It's
what
a
you make, or any of it. Doesn't matter.
It does, and it only can grade what it knows.
Right.
It doesn't know that you're a surgeon making 700. It doesn't know any of that.
Right.
So
Yeah, that's kind of crazy. So look, this has been a great show. We've got IllinoisCreditServices.com. What's the best way for them to reach you? Is that is just going to the website or
IllinoisCreditServices.com. Yeah. And then, or my number is 630-427-8500.
one more time, 630
427.
427 8500. Let's see if we can put that in the comments section. Guys, Jim, thank you for coming on. Dave, I always appreciate you coming. You can carry the weight sometimes, especially when I'm taking care of my blood sugar.
This was fantastic. I was so excited because we do this sometimes together, like it's his show.
Yeah.
But when he told me that, I was like, that's going to be fantastic.
There's a lot to cover.
There's
and I'm
so
glad to
much.
get into it. Yeah.
And I told him, I said, you're not going to get all that one show.
Oh, I knew. Yeah.
Like,
That's why I'm trying to get him to come on once a month at least, so we can get him on it. Because that's a big part of what we're doing. Guys, we would like to earn your business. If you're looking to buy, sell, or refinance, we'd like to talk to you. Let's give us a shot to help you. You can reach me at 630-352-0629, 630-352-0629. I'll get you hooked up with Dave. Website's mytrustedprovider.com, mytrustedprovider.com. And God, Dave, how can I get a hold of you real quick?
708-990-1166.
One more time.
708-990-1166. Dave Wonder at Century 21 Circle.
Yes, we'll be back next week. Appreciate you guys. God bless.
Take care.
Views made on the preceding program are not those of WVTC Radio, iNetworks Communications, or their financial supporters.
Winning victory through Christ. WVTC Allsip Chicago.